Hey, what's up, everyone? It's your boy Dark Bull Algo, and thanks for joining me on another weekend watch us building session. Yes, today is Sunday, February 27th, 2022, and we're going to find the top four stocks. Actually, it's going to be top five stocks this week that are going to make a greater than expected move. Oh, man. The market has been super crazy lately, but we've been able to hit the upside and the downside. I don't know if you've had a chance to look at my watch list recap video yet, but we've been doing pretty good. Like, I think we've only missed one in the last couple weeks. And with this extreme volatility and what's happening in Russia and Ukraine, I think we're doing really, really well. So, a little bit about me. I'm a smart money dark pool block trade algorithm analyst. I'm a trader. I do day trading. I trade options mainly, except for on Fridays. Fridays I'll trade equities because Fridays are tough, right? Sometimes it's better to just trade some equities on Friday. It's a little bit easier, a little bit slower. And if you get profit, then you've got something that you can add to your long term. So, and also, if this is your first time seeing a video from me, welcome. Thanks, I appreciate it. Go ahead and take a second and click that like button, subscribe, and turn on notifications, that little bell icon. That way you get notified anytime we put out a new video. I'm going to do a really quick intro, and when we get back, we'll just jump right into it. We've got 5 stocks this week. One of them is a continuation from last week. Any guesses on what that's going to be? Yeah, you're right. It's going to be Shopify. So with that being said, real quick intro, I'll be right back, and we'll get into it. See you in a second. All right, traders, welcome back, welcome back, welcome back. So this week is going to be very exciting. There's going to be volatility and potentially some continuation. The overall markets, right, are looking pretty heavy. We really have to be nimble. We have to pay attention to if this last little 2-day rally is just a reversion to the mean, setting up for a larger downside move. So do not enter this week being biased. I know that there was a lot of moves last week and people are excited about the bullish trend, but we just have to be super careful. Make sure you check in on the futures every single day. If you join me for my live stream, I am up at 7:30 Eastern Standard Time. I do a live stream for about an hour, hour and a half. We go over any news and events and earnings. We also look at the overall market in each individual sector. We've got some pretty clearly defined levels that the ES and the NQ have been hitting, so we're pretty spot on with those. Like I said, we may be setting up for a larger downside move, okay? Just be wary of that. Other than that, if you're not familiar with how to trade in this volatility, there's absolutely nothing wrong with paper trading or sim trading until you can get used to the ups and the downs. You know, I've said this quite a bit, that you should treat this market like a cold shower, right? Jump in, jump out, right? Get in and get out. That way it doesn't really hurt you too much. And as always, manage your risk and take paper cuts. Don't cut any fingers off or anything like that. You know, I've got little post-it notes all over the place. You know, I'm looking at one right now that says no big losses, you know, take profits, those type of things. It's always good to just kind of remind yourself of what you're trading for. And finally, I'm going to be putting out another video today. I have an opportunity to go through one thing that I think a lot of traders today don't really put a lot of emphasis on, and that is the psychology of trading. When we trade, there's a lot of things going on. It's a very, very mental game, and making sure you have proper psychology going into it can really, really help grow your account and get you to where you need to be. Stay tuned for that video later. I've got a partnership. I don't want to get into too much into it right now, but I'll be putting that out later today. And so let's just jump right into it too. So the top 5, that's right. The video says 4, but it's going to be the top 5 stocks for this week are, you ready? Fiverr, Shopify, CHWY, Low, and eBay. Yes, top 5, man, craziness. All right, so what we'll do is we'll go through each one of these individually, and then we will look at what's going to happen from a technical standpoint, as well as from a smart money dark pool and block trade flow index standpoint. Okay, let's hop right into it. First stock, Fiverr. Fiverr's up. Here we go. All right. What you see in front of you is the flow index, or this is FlowTrade. They've created their own flow index algorithm that tracks smart money, dark pool, block trade, large institutions, hedge funds, the big boys, the transactions. So from that, they've created what's called the flow index algorithm, and that's that purple line you see here on my screen. The green bars are obviously price action. If I were to draw any lines, yellow is usually support and resistance areas. If you see any white lines, those are typically, let me back up. So yellow lines are my markups for trend, support, divergence, those type of things. Red lines across the screen are regular block trades. Blue lines across the screen are dark pool block trades. And white lines are fun. No, if there's a white line, what that means is that there's a regular and a dark pool that are printed on top of each other, and those are major inflection points. Mark them up on your screen, see what happens with price interaction at those levels, okay? I might also throw some Fibonacci levels on here just to look at retracements and extensions. It's a pretty well-rounded system, and what we look for is we look for opportunities where there is a divergence, okay? And looking at this fiber chart, you can see that the flow index has been buying into fiber for quite some time now. And the way that smart money gets into positions, if you think about it this way, if you place a multi or even $1 billion order, what will happen is it will eat up all of the liquidity instantaneously, causing a little bit of a blip, a little bit of a surge. And as other traders try to get into that position, they realize the liquidity is gone because you've eaten up all of the orders, the available orders. And what would happen is when price settles, and this happens in microseconds, right? When price settles, price action is actually downtrending because there's no liquidity left. There's no shares left to buy. Okay, just very generally speaking here. And so what happens is smart money is in a lower position than when they got in. So to avoid that, they scale into positions in incremental changes as price is coming down, so that when price hits its support level, they're at a baseline of their entry is at a baseline level, so that as price starts coming back up, they can start scaling out of their positions and be profitable. So you can see a lot of times what will happen, specifically with Fiverr here, is they've been buying into this position for quite some time. Looks like since about the 11th of February. And coming up on the 17th is where we actually start to get some divergence, where this flow index is heading in one direction, right? And price action is heading in another direction. So what we look for is we look for where that divergence breaks, and price will always revert to the point of divergence. Okay, we're tracking price action at this point. So as long as smart money is continuing to buy into this position, they will continue to buy as it's going up, because we know we have a point of divergence at about 85 to 90, and that's what we're looking for. So some of these little divergence areas have already been played out. The $70, $72 level, those have been pretty much played out. So we're really looking to capture this last little tail end of the move that goes from 75 to 80 to 85 and potentially even 90. So there's about a $15 move there on Fiverr. We also have the ability to look at it to the downside. And a lot of times what will happen is, if we know that there's divergence and price is still selling off, we'll try to catch some on that downside move as long as we know that flow index is still rising, okay? The same is true, the inverse effect is true. So if we're looking at getting into bearish positions, we would want the flow index to be selling out of those positions as price is rising, catching a reversal point, and buying a put so that we can catch that move back down to the downside. So that's it in a nutshell. Fiverr doesn't have any real block trades coming up in the last 5 days. Maybe I can move that out to 7 and see if anything pops up. And nothing in the last 7 days. Looking at Fiverr from a general technical analysis perspective, this white bar is a 21-day EMA, which we consider the mean, right? That's the price where price feels most comfortable and likes to pretty much stay within. And this yellow bar is point of control. So we're currently trading. We came down, traded at -2 ATR. We're getting a little bit of a TTM slingshot squeeze with a ready and fire, getting ready to set up and fire off a buy signal. So we'd look to play at least the reversion to the mean and potentially up to 1 ATR, back testing this 50-day. So that move from 75, the mean is at 80, right? 1 ATR is about 88, and the 50 days at 91. So 75, 80, 85, 90. As far as Keltner channel perspective goes, Longer term Celts, I know it's really hard to see this screen. And I'm kind of torn between, do I want to really get into this type of analysis on the recap or the watch list video? I think it's important, but I'm also trying to keep these videos short and sweet. So currently we've got support coming in at the monthly Keltner channel bottom. We got a nice little hammer going on Friday. MACD is starting to curl around a little bit. On we're coming off of daily Keltner channel support, looking for a move to the daily mid, which is at that $80, and then up to the 50-day daily top at 90. Looking at it on our weekly Celts, right? These are the 1-day candles. We're a little bit below the weekly Keltner channel cloud. So last time we tested it, we rejected it. Now we've got that support of the monthly coming in, and we're inside of the daily. So we're trying to get a momentum going back up into the weeklies. So if we can if we can get back up into that $90 level, if we can break above 90 and back test the weekly, then we would move back up to the weekly mid and then weekly top. So that's a larger, longer term move, depending on, first of all, if we can confirm support of this being like maybe an inverse head and shoulder setting up, or us getting in and creating a back test of the weekly for support. Okay. I think I'm going to end there. Let me just pop this up for the next chart. Moving on, this is some intraday stuff. I've been working on getting my charts cleaned up a little bit. Looking at, this is just the same move but broken down on some intraday time frames. Not super. I'm trying to find the best time frame to explain some of this for y'all, so that you can see the move a little bit more clearly. Coming off a demand zone, we came back up. We're currently in another demand zone, working towards the 4-hour top. So that move to 80, right above the 4-hour top, puts us at the daily, weekly mid. That $80 range is first target. If we can get up and back test and use 78.36 as support, then we can target the daily top, weekly cloud. So the weekly cloud goes like this, and getting out of the monthly, but basically using the supply zone up here as a target. So we've got a nice supply zone that runs 87.50 to 90. Nice magnets, right? We got a MACD crossing over. We've got slingshot squeeze getting ready to happen. We've got a lot of bullish momentum happening. However, we have to be aware that there's also a downside play. So if this bull flag fails and we reject the 4-hour Keltner channel, or even the weekly daily mid, so if we reject 80, the downside move would be back down to test at 75, and 71. And if those break, we would come down and test the daily bottom, 4-hour bottom back down at 67.50, 65, 67.50, those areas there. This is more of some intraday stuff, seeing how it's moving, look like maybe a little V-shaped recovery, right? This is a little easier chart to read. So we came down, we tested the monthly, we came up through the bottom of the 4-hour, the daily, 4-hour mid. We're testing the 4-hour top to get through to test the daily mid, get back into that weekly cloud, right? So 75, 80, 77.50, 85. I'm gonna probably slim down my charts a little bit. I think that's a lot to go through. As far as just, candlestick price action, EMA, technical support like that, going into Friday on the 15-minute chart, we had a 50-200 crossover. So now we've got stack positive moving averages. So we've got momentum, conviction, and directional moving averages as well. So 821.34, 5200 above the Ichimoku cloud. VWAP's at 76.34. So above that, we move up to 80, 85, 87.50, 89, right? There's definitely a move set up for there, okay? All right. As we get through these last 4, what I'm going to do is I'm going to go through these relatively quickly now that you understand how the flow index looks, some of the stuff set up with support and resistance, and how my charts are set up. Okay, I am probably going to remove that out of the equation. I like that 30-minute, like daily. So daily, 4-hour daily, weekly, 30-minute. What do we got here? We got the intraday move. And then, yeah, I think that that's going to work. So next up on our list is Shopify. All right, let me just check something here real quick. Maybe it's over here. So Shopify. All right, let's bring up Shopify. I got to go through and move all these over as well. So in 1 second, I'm still looking for a faster way to do this. All right. All right, Shopify. This move last week was amazing. $100 move off a divergence. So the flow index is still, I would say, bullish. We are at a support level, right, with the flow index. Kind of a little bit of a bull flag forming on the flow index. So we look to break out and continue to move up. Possible cup and handle. Most of these divergences have played out. We're looking for this longer term divergence up to approximately 750. 750. With the understanding that there is a trading zone that runs from about 720 to 750. So we can get up there, we can get that nice move up. I think that's good for the flow index. Okay, moving on to our daily chart. So we're still below the 50, we're below the 200, where the 21-day EMA is coming in at 807, and we traded all the way down to -2 ATR, -2.5 ATR. We're starting to fire our way back up towards that mean, like we did back here. We back tested it here. All right, we rallied, we back tested it here. Slingshot squeeze, we may be a little bit early. Ready, and fire's getting ready to fire off. $90 ATR, right? This thing can move and move chunky. All right, looking at the daily Keltner channel, MACD crossing over, working to get back up into that daily cloud. So if we can move up to about 7, so we break 700, back test, look for a move to 807 and then 914. Yes, those are large moves, but we're coming off of some key levels of support. So we fell below the 200 on the daily chart, right? We're trying to work our way back up into that. Nice move on Friday. Held the monthly Keltner channel bottom. So we held this and the 200. So we're really trying to reverse here. If we fail below 6, so if we break down below about 650, we've got one little stop at 636 before we have to do a fib level for a larger downside move, right? We're currently at a pretty gnarly little previous supply zone, right? Last time we hit this level, we went on a rally, right? After we rejected it, came back down, found support, rallied up through it, made a larger move up, okay? Right off of that demand zone, lots of consolidation happening with the TTM squeeze. We did make that nice move from the 4-hour bottom to the 4-hour top. So what we're looking to do is we're looking to overtake that 4-hour top, that $700 elusive level. So rally up through the 4-hour cloud, right, up to 700. Use some support here. That's also the daily cloud top. So we would get through the daily, back test the 4-hour, right? From here, we would attack the mid, or the monthly mid. Oh, pardon me. Monthly cloud top. So up to 700, back test, move to 750 psychological level, and then up to about 780. Ultimately, closer to 812, 813, which is where we got this daily Keltner channel mid. Above that, we get super juicy up to the daily top, weekly cloud top. There's a supply zone sitting up here at 900. Yes, those are large moves. Let me illustrate how that would look. Something similar to this, right? Something like that. Now, is this Elliott wave off a little bit? Right? Is it? It could be. This isn't necessarily an Elliott wave analysis of it, but this could be 1, 2, 3, backtest 4, and then 5, right? Something maybe around like this. Okay. It moved down very quickly. Cup and handle forming. So this fourth move may be a little larger, a little bit more exaggerated to form that handle, or we could do a longer term cup and handle. Okay. So shop going to the upside. I like using this chart. lets me illustrate things a little bit better. We fell down. So 4-hour Keltner channel bottom, we were in the monthly cloud bottom, right? We fell through it, right? Intraday 4-hour saved us. Long-term slingshot squeeze getting ready to fire off. We retraced to the 21, right? Which is the daily cloud. So pop up, back up, back up. A little bit easier to see here, right? A little up, back up, something along these lines. Okay, that's one opportunity. Let me just move this off to the side. So there's an opportunity there. Contrarian. The other way we could go with this would be like this. We rally up, we reject the 4-hour, we come back and back test the monthly cloud bottom for our mid. If we reject that, then we can come back down and make a larger move back down to the downside. Okay, so it's very possible we go 4-hour top back down to 4-hour bottom. So 700 to 600 or 700, 800, 900. Shot moves about $100 a day. Definitely have an opportunity to catch a little piece of that. Okay. All right, Shopify on the 15-minute chart, coming off of a major demand zone, right? Just kind of chilling in it. What I like though is on this 15-minute chart, kind of hard to see, right? So, let me get this moved down a little bit. Rally up, back test, up, back test, up, back test. What we've got going on here, we've got stack positive moving averages again. 8, 21, 34, 50, 200, Ichimoku cloud support, bull flag forming. So Shopify is looking pretty good, coming off a long-term TTM squeeze. MACD may need a little bit of pullback to support, right? I would use this 50 Ichimoku cloud as a guide, right? So below 665, we have a VWAP on point of control at 650, 660. If we break down through this Ichi cloud, back test the 200 at 640, bounce off of there. If we fail that 200, right, then our directional SMA is no longer providing support. We may fall back down to test 580, test previous lows. I do like this reversal, this V-shaped reversal pattern. So overall, I'm bullish on Shopify, but I also understand that we're in a very turbulent market, so we need to make sure that we're able to play both sides of it, okay? All right, moving on. Next up on our list is CHWY. All right, so I was able to market this chart up a little bit. CHWY is a little different in that we've got a bunch of block trades. Let me just get through this part. All right, so CHWY. Flow index was trading with price action for quite a while. We finally got a little bit of divergence. This micro divergence has already played out, right? So this divergence has played out. Now we're looking for the flow index to continue to pull price action up with it, right? These regular block trades at 42.15, 42.17 will provide resistance. We have a dark pull down at 40.59 and another regular block trade at 40.16. So up through dark pull level, back to support. So we've got some trendline support going on here. Right, a little bit of trendline support going on there. All right, we rallied up. These regular block trade levels came in as a magnet. These have been filled. So there's a trading zone that runs from about this regular block trade up to this fib retracement, this next cluster of consolidation. This is a pretty sharp cup and handle, but I still think it's a cup and handle. We've got an initial target of about 43. The 382 retracement from this high to this low is coming in right at 43.88, right? So typically we'll get at least a retracement to the 382. At that point, it'll make a decision if it wants to reverse and make a larger downside move. But with the flow index being so strong, making higher lows and higher highs, a little bull flag forming here, I anticipate a move through 44 up to the 50% retracement at 46, and then finally the 618 at about 48, okay? Will there be some pullbacks in here? Absolutely. Nothing moves in a straight line very often, unless it's going to the downside, then it can move in a straight line. Looking at CHWY, nice little move down to -3 ATR, or 2.5, 3 ATR. It's like, if you can imagine a rubber band like being pulled out, right? Price action, the further it gets away from its center point, the quicker it wants to retrace back to it. Okay. So we're currently trading back down at 2.5 ATR. We do have earnings coming up end of this month, or end of March. Slingshot squeeze just forming, ready and fire just forming. We may be a little early, so we have to be aware. This is a bear flag. We have an opportunity to break lows and go further down. However, I like point of control, 21 EMA, 50-day, kind of flat ATR bands. I like that. Move back up to, like I said, 44, 46, 48. Let's just call that 50. So move back up to the 50-day at 50, 50, 50. Right? Pretty easy to remember. Coming off of the monthly bottom, rejecting our trend bar, back down and testing our monthly bottom, hammer forming, right? So 1, 2, 3, 4, 5 move, right? That's what we're going to look to have happen. I like this support at the monthly bottom. So I'd say $40 is about support. Coming up, we worked our way back up into the daily Keltner channel cloud. Now, like I said, MACD is curling over. Looks like we've got a little bit of weakness here, so we may need to consolidate around this $40, $41 level before we make that next nice move up. All right, so here, up, back test, move up to the daily mid, back test in the 50-day, right? If we can find some support there, then we can obviously want to target the daily top. So see how that moves back up. So initially 44, 46, 48, 50. So every $2. It's coming out of the weekly cloud. Let me get this out of the way here. Oh. Right, we're going to work back up into the weekly Keltner channel cloud. Right, resistance of 45. Use it as support for a move back up to previous highs, 54, right? 57, 60. Like, there's a room to move back up. See our stair step down. Weekly bottom, weekly mid, weekly bottom failure. Couldn't get back through it. Rode the weekly down, got back up into it. Couldn't maintain the support on those down days last week. Finally found some support. MACD's a little early curling around, and earnings are in about 3 weeks. Did I go through all of them here? I did. Let me get back to the monthly. All right. Big old supply zone here, so lots of transactions will occur here. A safe move would be, see how we came into the 4-hour. We're at the 4-hour mid now, which is a daily cloud. We're looking to do daily mid, daily top. So if you want to confirm the cup and handle reversal and wait till we get out of the 4-hour top, so above 45, profit taking at 46.50 for a move to 50 psychological, 52.39, big old supply zone up here. Okay, a little easier to see. We're working through our Keltner channel clouds now, trying to get up into this like blue sky area here. So above 45, right? Retest 40, and retest at 50 for a move back up to 55. Slingshot squeeze getting ready to release. Radiant fire getting ready to fire off. Stair stepping our way up, right? V-shaped recovery. This is a rally to the 21, so we can very easily back test the daily bottom for our mid below that. So if we break down below this $41 level, we can easily slip back to about 38, or excuse me, 39, 38.50. If we get cracked below 38.15, we'll retest previous lows at 35.88 for a larger move downside. Okay, so when things reject the 21, they can move back down. So it'd be 1, 2, 3, right? Just be careful. There's two sides of it. So what I like about this play with CHWY and how it's setting up. So our directional SMA line, which is this red one, has been downtrending for the last couple weeks. We finally got some bullish crossing over of our moving averages. We've got a 50, 200 crossover getting ready to happen. So we've got strength and momentum coming into this move. VWAP and point of control are at 44.25. Let me just move that. I have to go from a high. I'll move it a little bit. Okay, there we go. Yeah, VWAP's at 43.50. Point of control is at 44.50. So we have stacked positive moving averages. Nice long-term bull flag forming. Getting ready to have a 50 to 200 crossover on our lower end time frames. Leads me to think that we're going to get a nice move up, maybe some back testing, and then we get a larger move up. See the low at 48, there's no volume there. We've got a lot of volume at 45. Just call it 46. Lots of volume at 49.50, $50 level. Lots of volume support down here. So if we do break down below these moving averages and the Ichimoku cloud gives out, we would look to target major levels of volume and previous support. So there is a downside move and an upside move. I think I've pretty much done a pretty good job of giving it to you. Okay, next up on our list is we have low and eBay left, right? All right, let's go with low. So low is, this is a good example of the flow index making higher lows and higher highs and pulling price action up with it. Most of this divergence has played out, but we've got the flow index dragging price up with it, okay? This would be a nice little inverted head and shoulders, I would consider it. We have a regular block trade that came in at 219.18 at the end of the day on Friday. That's going to be support or resistance. If there's a bunch of buy orders coming in there, then what will happen is price will go up, it'll back test it, confirming support, and make a move back up to the upside. This could be possibly a 1, 2, 3, 4, 5 move. Just going to keep an eye on the flow index to ensure that it continues to make higher highs and higher lows. If it starts pulling back, then we would need to look at potential move back down to some support levels for a larger move upside. That would be a really gnarly inverse head and shoulders at that point. Okay, so low, I'm looking at both ways with that. Okay, so let's just do this. Oh, no, what did I do? All right, so low, just falling, right? Falling down, riding that trend line or that mean of support out to -2 ATR back, out to -3 ATR back, 1 ATR back. You know, just kind of riding the mean down. A little concerned that we did break down below the 200. We have a doji here that formed on Friday. Dojis are usually pretty good to reverse trend, right? There are areas of indecision. As you can see, there's a doji here before we started the downside move. Let me see if I can find the other doji. There's a doji right here that confirmed move back up to the upside. There's a doji here, move to the upside. Long-term doji here. We did close below the 200-day, which is by itself bullish or bearish. Looking at a slingshot squeeze starting to release, like I said, we may be a little bit early. We had earnings last week. Looks like they had some pretty decent earnings. So we're looking for a retracement back up to the 21 EMA, potentially the 50-day, right? So rubber band back up to 227.50, right? Or this previous high. Look to go long above 217.50, right? That would be back above the 200. $8.45 ATR. Looking at low on our. All right, so we fell into the monthly cloud, but we dojied right off this 50-day. So last time we hit this 50-day, we bounced. 50-day bounce, right? Since we've overtaken the 50-day, we haven't broken back down below it since COVID lows, okay? So we're kind of riding this uptrend. Nice healthy pullback. MACD is falling, so The other thing with dojis is we could easily fail. So looking at, we move below, if we take out previous lows at let's just call it 210 or 209. So below 209, we trade this zone back down to about 186, possibly as low as about 181 or 182. So we would trade this zone back down if we broke below previous resistance, which is now support. Let me just draw this out. So see how we have resistance, resistance, right? Resistance, we break through it, we exploded, right? So we're using this area as support. We're looking for a move back up to previous highs, right? Maybe the monthly cloud top. There is another target at 235. That would be a pretty significant move. So I'm initially thinking 220 to 225, 225, 230, 235, 240. We reject 220, back down 215, 210. I don't know if it moves in those exact $5 increments. It looks like it moves. Yeah, on the fives. So, all right. So we did work our way back up into above the 200 on the 4-hour, back up into the daily Keltner channel cloud, MACD crossover. So we're looking for support here for a move back up to the mid. So 220. 225, 220, 227, moves about $7 a day. So we're at 220, 227, 227 up to 235, 236, right? Daily candle, we held the 50. We're fighting our way back up through. We rejected the trend bar once, but we'd look for a bounce, maybe a little bit of a pullback to confirm support. Move back up to 230. What is this? 238, right? So 220, 225, 230, 235, 240. $5 increments, $7 a day. You could do $10 increments, 220, 230, 240, just to keep it easy, right? Right off of some demand zones, we worked our way back up in through the 4-hour Keltner channel. Perfect example of breaking through and back testing it for support. We rallied up through the daily. Now I'd say back test it for support. Supply zone up here that runs, looks like it's 223, which is a 4-hour top, or 224. So move to the 4-hour top at 225, right? Work our way through that cloud, 225 to about 228, which is also monthly, and then previous highs. So kind of overextended on stuff. Maybe pull back if 217.15 breaks, we can move back down to about 213.75, right? Or even all the way back down to about 210, right? That would still be a higher low, and then we would take the move back up to 225, right? So if we can't go up and eat this supply zone during this rally up, and we have to work our way back down, we would get it on the next round up. That would give time for our MACD to cross back down and up, right? So neutral and decreasing, neutral decreasing move. I don't feel like I'm doing a good job of explaining this to you. So MACD would come back down. We would get a pullback to support. This is the extreme pullback to support. So MACD would come back down and cross up and over, given time for everything else to kind of cycle back up and through, okay? So the downside move would be 210 target. Upside move would be 225. Yeah, 225. 228 possibly. A little bit easier here to see. So we've got that 5200 coming up to cause a little resistance. We did rally up above the 200 on our 4-hour chart. Weekly bottom, 34 EMA resistance. So we've hit it. The last time we hit the 34, we fell off. Every time we've back tested the 21, it's pushed us back down. So we finally got above the 21 and closed above it, a 4-hour candle. So pull back to 217, move to 225, a little bit of a fight from 224 to 226, right? Fight through that. Targeting the daily mid at 227, back test, move up to previous highs at 235, okay? And then finally, like I said, we've got some stack positive moving averages intraday now. We're looking for this 50 to cross over the 200. It's been a long time since it's done it. 821.34, 200, then 50. So it'd be 828, 21.34, 50, 200. Ichimoku cloud support. VWAP and point of control is, let's see. We're at VWAP right now, so if we can hold this, definitely a nice move back up to previous highs. We're right at a volume zone. If we break this, we back test and this 216 level fails, right? Like let's say that the 50 bounces off the 200 and moves back down. We've got support on the way down. Point of control is at 213, so if there's a downside move, look for the support level to hold for a larger move to the upside. If we get back below the 200, below the 21, below the 50, right, and point of control fails, then we have to look at, sub 200 for a move on low, okay? All right, and finally, last but not least, I feel like I'm taking too long, but that's why I like doing the 4, because I think it's just the perfect amount of time. Okay, so with eBay, they've been net buying into eBay for a couple of weeks now, right? Nice move Thursday and Friday. This is see how price interacts with these block trade levels, right? Regular block trade came in on the 25th. In the morning, right? It hasn't been filled, right? So maybe those are some sell orders, gap down, up, down. Okay. Flow index is trading with price. We have a little bit of micro divergence here. I don't even know if micro divergence is really a word. Looks like we got a little micro divergence there. See how at this point in time here, the flow index was moving up. Price action was moving down. So we're going to target that initial divergence point at 55.45. That would put us on track to trade back up into the zone that goes from 55 to about 57. If we reject this overhead resistance, we do have, right, we've got a regular or dark pull. So we're at a regular block trade at 54.60. We have a dark pull at 54, let's just call it 55. That might cause a little grief. And then there's another one at 55.45. So up, back, up. We clear 55.45. Pretty smooth. That would be this divergence playing out. And that would be the beginning of a new trading zone back up to some of these consolidation levels here. That's a pretty decent move. 1, 2, 3. Contrarian, right? So let's say we reject this regular block trade and this overhead resistance. We have a dark pull at 54.16 and a bunch of regular block trades at 54. Below that, we have one final hope at 53.70 before we come and test previous lows again, okay? Let me just get eBay pulled up here. All right, so one of the things I like about this is it already had earnings. It's got a dividend day next week. So it's usually there's a sell-off at the dividend day. But we did hit the 21. See how price likes this 21, right? We traded all the way down to -3 ATR. Slingshot squeeze getting ready to happen here. Radiant Fire's giving us a buy signal. I'm looking for that move back up to the 21, which is about 57.50, right? Or potentially previous highs, the 50-day at 60. So 57.50, 60 to the upside. We reject. Obviously, we have a $50 magnet to the downside, 52.50, 50. Okay. We fell out of the weeklies really, really hard. Let me get the right chart up here. All right, so we fell into the monthlies, fell out of the 50s, couldn't get back above the monthly mid, fell all the way down close to the 200-day on a weekly chart. Okay, looking for this MACD to cross over, so we may be a little early, right? There may be a little bit more pulling back, right? I would say below 50, right? Below that psychological $50 level, we have support at 46.61. Do we need to finish our down cycle to the monthly bottom, right? So both ways, look for a move down to about 47, 46.50, even as low as 42. If we sell off, right, eBay down to about 42, right, which is the monthly bottom, we did rally back up through into the daily cloud. So do you see that move that we made up into the daily? Back test for support, next move to the daily mid, daily top 50-day, right? If we were to use Elliott wave theory, this is kind of what we would be looking at here, right? That's a big move. $2 ATR, and it went 48 to 55, right? That was pretty much a triple ATR move. 48, 50, 55. Yeah, close to a 3 times ATR at 55.81. It's a big move, right? Kind of what that light move would look like here as well. So $52.50, 57. Where's 57.50? Yeah, there we go. So move to the daily mid, 57.50, up to the previous highs at 61. I'll just call it 60. So $2.29 ATR, $2.50 increment. I have not looked at the options contracts, but I would assume that they move in either $1 or $2.50 moves, right off demand up to some resistance. I know it's really hard to see this chart, but this is the daily. Looking like we might get a little bit of a slingshot, right? A little bit of a touch and go. Medium compression, slingshot squeeze getting ready to happen. Supply zone way up here at 60.61. Initial move 57.50 puts us at the 4-hour top, off of the 4-hour mid to 4-hour top, right? Which is also looks like the weekly cloud bottom that we would work our way through, right? 57.50, work our way through to about 60, right? Ultimate target. Contrarian, we reject this level and it fails, right? We come back test 53.66. Below that, we have the 4-hour bottom down here at 52. So it would fail, move back down to the 4-hour bottom. If we blow through the 4-hour bottom, we've got a longer term demand zone and earnings lows down here at 48 to 50. That 50 is a psychological level. Okay. If I switch this chart up, it could be an inverse head and shoulders. They're a little bit easier to see here. Nice rally up. We cleared the 21. We're holding the 4-hour mid. Daily cloud is support. A little bit of a flag forming here. Mid compression squeezes. Radiant fires getting ready to give us a little bit of a fire signal. If we reject this level, right? If we reject this level and we got, right, so let's say we reject it, we back test it like this for this kind of a move here. Definitely a possibility. So if we fail this bull flag breakout, I would say below 54.31 for a move to 53.66, down to 52.12. Let's just call it 51.50, then backtesting 50. Okay, that's one possibility, right? The other possibility is we use this, right? Use this little slingshot effect that's getting ready to happen, and we take that move back up to daily top 50-day SMA. So would be kind of like this. So we'd go from here, test this, back test it for support, move up to here, right? Something along those lines. Oh, I like that. I like that. Bull flag breakout, right? I'll just redraw it. How about that? All right, so up, back, up, possibly. All right, so there's two ways to look at it. So we had that 50, 200 crossover. I'm starting to see this a lot more on lower time frames. We finally retake the 200. We're below the 50-day, so maybe some consolidation happening here between VWAP and point of control. Lots of orders sitting here. Look to break pre-market high of Thursday. So move up to 50, 55.84. Above that, 57.50. Right? Move back up to 60. Okay. We're working on getting our moving averages straightened out a little bit right now. That's why I think there's a little bit of compression and consolidation happening here. As long as the 50 stays above the 200, I think we may have a chance of these squeezes, these slingshots, these MACD crossovers releasing to the upside. Okay. All right. So that was our top 5 stocks of the week. Is everybody super excited about that? I know I am. Let me do one thing real quick. Let's look at some options contracts, shall we? I think we should. Okay. All right, let me get my chart set up over here. All right. All right, let's look at eBay first. Right. eBay's trading at 54. We want to look at this week's expiry. So 57.50, we don't have a 50-cent increment. Looking at open interest and just transactions. Any of these are definitely, this is a very, very cheap option to get into. I would look for a higher delta, but the bid-ask spread is super wide on this delta 70. So this 53 strike, look at the bid-ask spread, right? It's about 14 cents, like $2.16 versus $2.03. This has got about a $10 spread. This has got about a 10-cent spread as well. So we were targeting 57.50 on eBay, correct? So 58.60. So the 58.60s for next week, I don't know. That's going to be tough to get to. Remember, it has a $2 ATR, and it's currently trading at 54. So the 56s look pretty decent. Lots of volume, open interest. These 54s have got, looks like the most transactions have occurred at the $54 level. Okay. So let's look at the 54s. It's got a pretty decent delta. Not too bad of IV. If we went out, that's got pretty decent open interest as well. There's a ton of open interest at the $60 level. So contrarian though, we said we wanted to look at the 52 strike. Let's do this. Let's go with the 55 strike. So the 55 call, right? That looks pretty decent, 75 cents. We want to target $2 in the money. We can make a couple $100 off of that. To the downside, let's look at, wow, that's a lot of puts. There's a massive amount of put transactions. 120,000 contracts transpired on the 53 put. Open interests pretty decent. The $50 strike has got at 12 to 14 cents. There's something a little off with that one, just based on the open interest. Right, it's got one of the highest open interests. I don't know how I feel about that. Let's look at the delta. So yeah, I'd have to say the 54 put and the 54 call. Or excuse me. That's so tough. Yeah, 55 call, 54 put. It's basically a straddle. Unfortunately, that's just the way it's going to have to be. All right, moving on to low. All right, let me just see if I can get a snapshot of lows here real quick. All right, so 225, 227. Yeah, let's look at lows for this week's 225s or the 227.50s. Hey now. Obviously, the 220s have had the most turnover. Pretty decent IV. Delta, that delta's horrible. So we'd have to get closer to the money. I don't like the bid-ask spread on that, or that, or that. Ugh. These calls look horrible. The put side, however, looks pretty decent. Right? I mean, that's acceptable. That's a 10-cent bid-ask spread. So the 212.50 puts for lows, and then I mean, we'd have to go out to the 230s before it gets decent. That's a really low delta. So 225 calls. So 25 calls, 212.50 puts on lows. Oh, that's ugly. CHWY. That's a jacked call option chain, by the way. All right, so for CHWY, we're looking at, a struggle. 44. Let's see. Dollar increments. Okay. So we got point of control at 44. Next volume would be 46. And then 50. CHWY moves about 475 a day. All right, so CHWY currently trading at 42. So one thing I noticed on CHWY, which is weird, is that I'm almost out of strikes, right? Meaning that I can't see anything above the $75 level, right? Which is weird. Okay. So currently CHWY's trading at 42. We're looking for the 44, 46. Trading at 42, right? It's trading here 42.50. It's pretty decent. Pretty decent delta. Decent turnover. Okay, IV. So the 45 strike, right? I can feel the 45 strike. That's a great bid-ask spread, 2 cents, right? Pretty decent delta, right? Obviously, like higher deltas, and I won't go below a 24 delta. Like that, I think that's way too far out of the money. But with CHWY looking to make a move to 45, right, which is kind of a volume dead zone, which is a previous high, currently trading at 42 to 45. I think that's pretty decent. So I like those 45s. 45 call on CHWY. And as far as the puts go, let's see. On the put side, it's 38, 36, 38. All right, so the 38s, see, we'd have to go with the 39s as the lowest I'd be willing to go on the puts. Lots of turnover on those. Decent delta. I don't like that bid-ask spread though, right? 39.50s, you don't really gain much in delta. Let's go with the, that's a lot of turnover. Let's go with the 39 puts, right, at about 67 cents. I think I could feel those, right? All right. And then finally, all right, we got a couple more to get through here. Sorry, this video is taking way longer than I thought it was, but I think I'm just going to stick with the top 3 or 4 stocks, right? And then actually get into some of these options contracts a little deeper, right? So 750, 800. All right, so shop are really expensive options, right? There's nothing wrong with doing a vertical on these, right? Do a $10 vertical for $2. I think it's pretty good. So we're looking at 700, 750. The 800s are $1. Look at that delta. There's 0 delta in that. 0.045. 725 is about the furthest I would go out. $1.60. You could do the 725, 730, right, for about 80 cents for a $5 contract, right? And we're looking at 725, 730 as our possible targets for shop. All right, so that move up to the 34, up to the 4-hour top, right, is 710, 725, 730 is the top end of that. It gets you back into a trading zone. So 725, 730 vertical on shop. And then to the downside, we would look at 640, 650 puts. Or potentially 600s, right? So the put side, these 600 puts, look at delta again. 640, 635. You could get into those for about $1, right? And look to capitalize, make about $3 off of it. So maybe there's a tripler or a doubler in there. I think with those verticals, with most of these verticals, these $5 verticals, you should be able to at least double your money on them. That's a massive amount of turnover on these 640s. So 640, 635 or 640, 630 vertical, right? For about $1 or $2. Yeah, I like this. And then finally, Fiverr. All right, so Fiverr's only got monthly expiration options. So I usually try to go with the weeklies, but for some reason, this Fiverr looks really, really good, right? If this bull flag breaks for our top at 77.50, 79.50, 84. Fiverr only has $5 increments. Fiverr has $5 increments, so that makes sense, right? Let's see something here real quick. Right. So it would have to be either the 75.80, 80.85. 75.80, 80.85, right at VWAP. So 75 to the $80 level, 80.85, 85.90. All right, let's look at those. 85.90s. What's the delta on those? I'd have to say the 85s. This is another one where you could do like a 75.80 or even an 80.85 for about $1 and make $2 off of it, right? Pretty decent. It looks like about a buck 40. That would be tight. The 85.90s are only about 90 cents. That would be, I mean, that would be asking a lot for that. But we have 3 weeks. I like that. 85.90s to the upside. And let's say we break down, right? We're below 70, 65, 60, 65, 60s. Okay, I feel you. Yeah, we could do the 65.60, put vertical for about $1 to make $2 to $3. Definitely open interest, definitely volume, lots of volume coming into those. Pretty decent IV, right? But look at this IV. Typically IV moves up, right? But you can see that there's a curve, there's an IV curve there, right? It goes from 110 all the way down to 83, back up to 110. And the IV equity curve here goes, 136 to 85, right, to 115, back down. So, oof. I mean, I might have. The put to the downside would you would look to get about 80%, right, of max profit. The call side, look to get about the same. Okay. All right, that's it. Thanks for joining me. I know it was a little wackadoodle the way that I did that, but I do want to thank everybody for spending some time with me. I'll make sure I put some chapters in this video so you can just click on it and skip right to the chapter. I think that makes things a little nicer. If you have any questions, reach out to me in the comments section below. I love to hear feedback from you all. I try to respond to all of the comments as possible. And if you haven't already subscribed, go ahead and take a second, click the like button, subscribe, turn on notifications, share this with your friends, families, coworkers, neighbors, everybody. I'll see you all on Monday. Join me for the live stream, 7:30 Eastern Standard Time, same YouTube channel. Have a great day. Stay safe. Stay green. Have a good weekend.